What if I told you the Federal Reserve is quietly preparing for a potential $2 trillion market collapse, and almost nobody in crypto is talking about it yet? But this could be the next big catalyst for Bitcoin. Here's what's happening. For the first time in over a decade, the Fed is privately asking major U.S. banks one question: how exposed are you to private credit? This is huge, because regulators only start digging like this when they stop trusting the numbers and start preparing for stress. Now zoom out. Private credit has exploded into a $2 trillion market, but it's not transparent. It's packed with money from pension funds, insurance companies, and global institutions, all chasing higher yields. But suddenly, cracks are showing. Some of the biggest funds, like those tied to BlackRock and Blue Owl Capital, are blocking investors from withdrawing their money. This means investors are rushing for the exits, but the funds don't have enough liquidity to pay them. Now here's where it gets interesting for crypto. This isn't just some isolated Wall Street problem. If this market starts breaking, the damage spreads fast. Banks get hit, pension funds get hit, liquidity dries up, and when liquidity disappears, everything changes. Because crypto, especially Bitcoin, is extremely sensitive to global liquidity cycles. So you get two possible outcomes. Short-term, risk-off panic. Investors sell everything, including crypto, to raise cash. But long-term, this is where it flips. If the system starts cracking, central banks step in. More money printing, more bailouts, more liquidity. And that's the exact environment where Bitcoin historically thrives. So right now the Fed is telling us something without saying it out loud. They're checking exposures, and if this $2 trillion market starts to unwind, it won't stay in the shadows. It could trigger the next major shift in global liquidity, and that's exactly the kind of moment that defines the next big move in crypto.